Hello traders out there in trader land. This is a weekend edition video and good through April 26, 2020. D7 here with Grok Trade, and I just got done teaching and I wanted to get the weekend trading video out to you all sooner than later. We're going to hit the ground running due to a ton to go over. Markets on Friday ended on big time bullish territory, looking very good. Crude oil down 2.6%, silver break even, but VIX down 13%. We're at 35.9 Bitcoin at 7,500 plus. And if you like the speed, great. If not, you'll have to hit pause, rewind, listen again. Speed, I think, is good. All right, so here's the deal. Looking here at the bear flag. Now, here's the spider, very important to us. This is the daily chart. The spider daily chart is bear flag. If you don't know what a bear flag is, go to freeonlinetradingeducation.com, freeonlinetradingeducation.com. It's in the link down below in the description, but here's the deal. The S&P 500 broke down, a big bearish, massive drop, almost as severe of a drop as we received in the Great Depression, and then we rallied back. What makes this a flag? The wavy flag, going up and down, up and down, up and down. That is what makes it a flag. And the other thing is, on the Fibonacci retracement, we're only right around 50%. So we go to the top of the flagpole. Well, it's the bottom of the flagpole, but it's upside down to the top of the flagpole, which again, upside down. And you move it over, and you can see we're at the 50% Fibonacci, still below 61.8, very much bearish territory. Because it's a bear flag, because it's not a V-bottom, again, for you guys, if you don't know, I've been trading 22 years in the markets using technical analysis, been investing far more than that. I'm 46 years of age. And 22 years using technical analysis. I used to be with Rich Dad Poor Dad as a trading coach and mentor. Matter of fact, I'm an award-winning mentor with them as a stocks and options trading coach. And the very year I won that, I quit the company to become a competitor. So we are an education company, and I run one of the nation's largest trading clubs. So here's the deal. A V-bottom goes down and rallies in the same trajectory. They look symmetry, okay? Symmetry. This S&P going down, this is not symmetry. We're going up at a different angle, and it's very, very choppy, so it doesn't look anything like the drop. So this makes it a flag and not a V-bottom. Now, I say that to say this. We're in a short-term uptrend. Could this keep going up? Absolutely. This could keep going up and get all the way up to the highs where we were. That could, in fact, happen. I think the odds are against it, though. Especially if we zoom in. I'm using TradingView, by the way, and TradingView allows me to draw these boxes and zoom right in so you can get up close and personal. So we have this line, we call it the main line. We broke down below it. We have our minor trend line. And now we're tracking on what was acting as support is now acting as resistance. This is setting up to drop. We're caught up in the moving averages. Things can get really squirrely inside the moving averages. Look at these trend lines like sticky spider webs. Those sticky spider webs can cause all sorts of problems. We're in the middle of these spider webs, and they're coiling together. That does build in strength. If you look at things like Bollinger Bands, you can start to see a condensing that usually takes place right around the areas of condensing of the moving averages. That's why I think we're going to head southbound. That's what I think is going to happen. Anyone's guess on how far it will go down, but that is what it looks like to me. If I go here to the diamonds, same thing. We got a diamonds, but it's a small pinching rising wedge. And as far as the Fibonacci's are concerned, we draw the Fibonacci's down. We're right at the 50%, still below the 61.8, which is pretty bearish, guys. Any way you look at it, the NASDAQ looks far more better. If you do the Fibonacci's on this one, we go here. Techs have been just rock solid. Comparatively speaking, we're above 61.8, but we've already had it run to the upside. If we do start to drop, all I see is consolidation taking place. So in other words, I'm calling this really early, but we could go into what's called a symmetrical triangle. And I think that's what's going to happen with the NASDAQ. If you go here to the Russell's 2000, we had a nice sizable drop to the downside. And the big question is, how much of a retracement is that? If you look here, this retracement's at 38.2, so it's relatively much weaker than what we're seeing on the other S&P and the Dow, and especially the NASDAQ. So it is really, really, really looking quite bearish, and I see that breaking down. If you look here, we touch support, we go up, we touch support, we go up. Now we're hitting support, 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 support. Look for that to break down. So it looks like financials, if you look here, down, 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 bear flag, bear flag. If you do the Fibonacci's here, you pull the fib, you do this. We're at the 38. So we're seeing relative weakness on the financials and also the Russell's 2000. Bear flag, I look for that to drop southbound with volume kicking up. US dollar at a major support line, but we broke it on Friday. How do I know I broke it? Go to a line chart, you blow this up. Like I said, you can trading view, there's a link down there. I can go here and oh, I moved the line. I moved the line. Did not mean to do that. Oh, there we are. We're back. We're back. We're back. So do this. Draw that, zoom way in. You can see we're just below it. Do you see that? We're below it, below it, below it here. Blow it, blow it, blow it. All right, double click these, double click this. It puts us back. Go to this, it puts us back. So we did cross that line. US dollar could be breaking down on the daily. Crude oil continues to go down, but it's like we're trying to find a base right here at the $2.60. It'd be interesting to see if we'll drift lower. I'm not bullish this until we break up above these areas. It will happen at some point. Silver in a lot of pressure, a lot of problems. Gold looking much better, but it looks like a double top. M for murder. Up, down, and down. Up, down, up, down. It could be a double top for murder. Watch out for that. VIX is down, down, down. Big drop on Friday. Again, we're at 35.90 at the time of this video. Bitcoin continues to rally up. That's a big bear flag. That's not good for Bitcoin. If you do here, draw a fib coming down, all the way down. We're at 50, almost to the 61.8. We need to get way past that for it to get out of the woods. But that's where we're at. And by the way, I'm going at the end of the video, we're going to look at a lot of stocks. But before we go into the stocks, I want to look at higher time frames because that's very important to us. How's my speed? If you like the speed, give me a thumbs up. If you don't like the speed, you think it's too fast, I don't know. Give me a comment. Do that. But check this out. This is the spider weekly chart. Every bar is a spider. I'm burnout. I just got done 2 days of training, 2 days of teaching. Every bar is a weekly bar. Every bar is a weekly bar. And this cat needs a haircut. How many of you guys got a haircut during this quarantine? I did not. No haircut here. I'm a shaggy beast. All right. So on the spider weekly chart, we have this big rising wedge. We broke down from the rising wedge. We drop, drop, drop. We pull back. This is called a bear pullback. If you don't know what a bear pullback is, go to freeonlinetradingeducation.com. Go to the charts, go look for bear pullback. Bear pullback. And we have a tweezer top. This is problematic. This is a great time on the weekly chart to be looking for this market to go south. So I fully expect that to happen. Doesn't mean it's going to. This could be sideways for a few weeks, give us a high base, and then rally up. It could do that. It could keep trickling higher. It could do that. Right now, as we speak, with a tweezer top on a bear pullback, especially when you have a Fibonacci pull of a juicy 50 to 61.8 area, of course, this looks like a great area for it to drop. It's very conducive for bearish activity. If you go here to the Dow, same thing. Dow is under a lot of support areas. It rallied up. We have a lower high and a lower low, guys. That is our pivot candle. Look for that to start trending southbound, which I think it could absolutely do that. NASDAQ at major resistance, we rallied up nicely. I do fully expect this to drop. Guys, the markets are in a lot of trouble. Financials, the Russell's 2000, up. It's building kind of a little pennant here. This is interesting. I mean, yes, it's a bear pullback. Yes, this has a good chance of going down. I just need to watch this one because this one could be, this could fool us. This little pennant means we could pop up really nicely there. Nice bullish play. And here are the financials. This is what's very interesting on the weekly. We're down, 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 pullback. We're already starting to show this weakness. This just looks really more bearish to me, but there's some similarities. The monthlies are just eye-opening. U.S. dollar down, 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 but a lot of support below us. Crude oil is down, down, down. Just a nightmare drop here for people in crude oil, and it could be getting worse. Silver got back up above resistance area. It's trying to hold its own, but short-term time frames just don't look good. Gold is up, up, up. However, is it ready to take a break? It could be. VIX is a nice bull pullback. I do want to do the Fibonacci on this one just to see where we're at. We're down below the 61.8. So this one, I look for consolidation to take place. And Bitcoin is down, down, down. Fibonacci, I'm going to pull on this. There to there. We are nearing the 61.8 there. Okay. And a lot of these numbers I'm giving out, very important to those that have been through our mentorship, the 301s, 401s. These may matter to you guys more than they do other individuals, just due to your the level of education that you have. Okay, moving on. The monthly charts are crazy. So I'm going to go here. Again, Trading View, links down in the thing. Trading View is just very easy to use. Here's the deal. Monthly chart. We still go until Thursday. Thursday of this next week is the last day of April before we go into May. Now, that means this is a dynamic moving candlestick right now. This is what I foresee happening. Based off of all the technicals that I'm looking at on all the different time frames, I think we are going to start tracking lower. My gut tells me by the end of this month, we're going to be below these two trend lines. We'll be below those two trend lines. We could definitely be lower. Woe to us if this is a big time, bloody week coming up and we come crashing down. And we will see a multi-month crash in the markets. It will just keep crashing down. All support will be gone. All support. So that's on the S&P. The diamonds I see is dropping. Woe to the markets if we close down below 218 on the diamonds. If that happens, we will be below a major area of support. We're in a lot of trouble. NASDAQ rallied up. I foresee us staying above this area of support. It will be interesting to see how this market on the NASDAQ holds up. These are the Russell's 2000. We're already below all support levels. This is problematic, guys. We have a big time lower high. We have a higher low. I see us closing down lower for the month. This is the big one. This is the financials monthly chart. We're down. We broke this support. We broke this support. We hit this support and found support. We gapped lower this month in April. We rallied higher. They sold into that. We're dropping. If we close below this support line, look for it to release down. Big time problems for the markets as a whole. We're in trouble. So we only have 4 trading days left, almost 5 trading days, okay? In the markets, this is big time trouble, and you can see that 4 days, 23 hours is what it's saying there. U.S. dollar popped up above support, needs to stay above support. Crude oil is down, heading lower on the monthly chart. Silver, if silver closes lower, if we close lower than 1340 on SLV, it's in a ton of trouble. It needs to stay above that to have any sort of support. Gold is up, just looking really well. We really need to stay above 150.65. That's what we need to do. VIX, it looks like it's starting to drop down. That could happen. Let's see what happens with the VIX. And Bitcoin is setting up to go bullish. Big symmetrical triangle. We're having a hard time getting down to this lower line. This thing could rally back north. Okay, now we're going to get into some stocks of interest. As I do this, if you like what I'm doing, give me a thumbs up. I want to know your opinion on this. In the comments right now, tell me, are you bullish and why? Or are you bearish and why? Don't just say I'm bullish or bearish, and don't just disagree with me and throw hate. Give me a logical, pragmatic answer to to your argument. Okay, that's what we're looking for. Let's have some great, healthy discussions that we all can learn from. We all have great amounts of information and education. Share it. Don't keep it to yourself. Share it in the comments. We want to hear your logic on why you're bullish or bearish. Give us your arguments. I want to hear them. We want to hear them. Okay, let's go into some stocks of interest. I go here. Here are all my stock picks that are stock lists that I have. The one I'm going to look at right now is going to be my Grok stock text pick. So we're going to go to Apple first. We're just going to look at daily charts, okay? And I'm going to do calls. Here's the deal. I may or may not be in these trades. You can trade them if you want to. We're educators only. We are not financial advisors. Seek professional help, okay? There's my disclaimer. Here's the deal. I'm highly biased on this stuff. Big drop down. This is Apple. Bear flag. If we drop below this trend line, in other words, we get below the 20-day moving average, this is a short. Woe to that. AMD is kind of a high base. If it pops up higher, it needs to get to these areas of resistance. Amazon is a high base. Look for more upside opportunity. 2,500 will be a resistance point, but it looks really bullish to me. Baba hit resistance. It's a bull pullback. Look for an entry, and it could break through out of this triangle. Baidu, bear flag, stay away from it. Booking, not only is it a bear flag, it's a condensing one, so it's a rising wedge also. Big time bearish, get away from it. Cisco, high base, look for that to go higher, but a lot of upside. I would not want to be long this. Catfish, I just call it catfish because it looks like catfish, CTSH. High base, look for this to track higher. eBay, major resistance, look for that to drop, but look for a buy opportunity as it does. Facebook, up, hitting its resistance at 200-day moving average. Stay away from it. It's caught up in the moving averages. Nothing to do there. Google, high base, look for that to track higher. Google, that should be Google with an L. Same thing. Tracking should go higher. GoPro is at an area of resistance we broke support resistance. Let's see if it can get a back up above it or if this is going to track lower. Microsoft, stay away from it, nothing there. MU, stay away from it, nothing there. It's kind of a pinching pattern, bear flags. That's more bearish than it is bullish. I'm bullish on Netflix, or I could be bullish on Netflix. I could own it if I wanted to. I'll say it that way. So anyway, nice bull pennant. Look for more upside opportunity. This is NVIDIA, also bullish or could be bullish on NVIDIA. Look for this to break out to the upside. If the markets go bearish, none of this, very few of these things are going to go up. If we go bearish, it's all the boats in the harbor will drop due to the tide. Oracle is caught up in moving averages. Stay away from it. PayPal is up, but we have upside resistance and we're very extended to the upside. Take profits if you have it. High base for Roku, really bullish opportunity there. Look for more upside. Shopify, another high base opportunity, more upside. Snap, look for buying opportunities on a bull pullback. Tesla, big time bullish pennant. Look for more upside opportunity there. Twitter, big bear flag. Stay away from that. Not interested in Twitter at all. Do you like my speed? I just want your comments. Speed okay? Speed too fast? Speed down? I gave you a lot of information. Gave you a lot of stocks to look at and gave you my reason behind them. So our class went great. Just got done. Some amazing people. We had 3 different countries represented, 4 different time zones, and 10 different people in this class. It's funny, man. Everybody wants our education through the quarantine. Everybody's interested in trading, and that's why we're doing so many classes right now, and you're even hearing about it. But let's get off of that for a second. Get off of that. We're starting to produce more blog posts. The last one, if you haven't seen it, go to Grok Trade and go to blog, or free online trading education, go to the blog. Read the one on oil. There's opportunities there to trade. We are going to start producing regular blogs, very good writing content for you guys that I think you will find highly valuable. So not only do we do rich media content, as far as videos are concerned. We're going to get into some thoughtful articles that you can put into play that I think will be, one, educational, and two, perhaps financially, monetarily beneficial also. So that's it. I'm wearing a shirt. For you guys that's been with me a while, do you guys remember FTV? What does FTV stand for? But anyway, look at this old shirt I found. Very cool. Stumbled on that in my closet. Put it on today. That's what I did. Put it on today. So FTV, do you guys remember that? Who remembers FTV? Who remembers? Man, who remembers our past? We had multiple mentors with us with different names. Do you guys remember any of the names of some of our mentors? Man. And if you were mentored by any of our mentors, let us know. Yeah, it'd be fun to reminisce a little bit. So we're 12 years old as a company. I've been doing trading videos for a lot longer. I started doing my trading videos in 2004. That was even before YouTube. I was doing them. We got really popular over at a group called Trade to Win. You can still find them if you look for DES44, DES44, and it was called Free Trading Videos. My blog. So you'll see nobody was doing trading videos before 2004, daily videos like I was doing. Nobody was doing them. You would see some trading videos, but not producing them in an organized fashion before me. I was the first person to do them I am the pioneer who have been doing trading videos. Matter of fact, these aren't even edited anymore. I just do a one cut and I'm done. And you crazy people listen to the monologue at the end. I don't know why. If you made it to the end, say made it. Because I read it's like it made it. You guys are the crazy ones. I mean, I could sit here and blab about nothing for the next whatever. And man, you guys would listen. Matter of fact, I'll bore you with this. I take fish oil, and B12. I take B12. And also for the keto stuff, MCT oil. Tell me what you guys take. I don't like to do supplements as much. I get my nutrition through dietary means, just eating healthy. But I did a blood test and I did a vitamin deal, and it told me what I was deficient in. I was deficient in B12. I was deficient also in biotin, but that's in there because that's oil-based. I can take that without food. So when I make my coffee, I go ahead and take my biotin. But B12 is oil-based, fish oil. These guys I'll take with food, so I have it in my office here because I usually am in here when I have eaten. So there's useless information for you. It'd be interesting how many people comment on your supplements and what you take and what you don't take. And I'll know that you stayed until the end because you guys are commenting on this. My hair is shaggy. Shaggy. Okay, guys, if you like it, share it with a friend. Share it out. Got some crazy things we're working on that I think you're going to be quite interested in. Very, very crazy things coming up. Very crazy things that I think will blow you away, actually. Have some big, just exciting things coming up with Grok Trade. And you guys, because I sit here and don't filter anything that I talk about, I just ad-lib, you're going to find out about it much faster than probably what we're doing. Anyway, I don't want to talk about it yet because I got to get my ducks in a row. When I talk about it, I need to be able to point you to that information so you don't just like, oh, thanks for telling us and not give us anything to research. That's it. You guys, love you all. Man, you guys are awesome. I love seeing all your comments. You guys, even though I try to go and give you guys hearts or comment, I tried to do my best. It's been a busy couple weeks of training, and I'll be training again next weekend. Holy smokes, man. The 401s are going great. We call it the master trader. That 401 is chart city. Today, our class, we talked about what we call the RSS trade, the real simple strategy, and we were crunching Excel numbers on that strategy. And what we were doing was I had the class say, give me a ticker symbol, any ticker symbol. So people were giving me different ticker symbols. I was going back on each one of those charts looking for a specific setup. And when we'd find it, we would place the RSS trade on that. Okay, so we were basically paper trading it, and we would say, did we make money or lose money on that? What we found, we did it with multiple stocks that people gave me at random. And what we were finding is we would lose money on 13% of them. So 87% were winners. That is unbelievable odds. So, and we were getting a solid 2-to-1 reward risk ratio. In other words, it's a system that is making an unbelievable amount of money for us. I don't know how long this will last. It's just working, the RSS trade. So we spent a big part of today exploring that as a class, that methodology of trading. And we were all kind of stunned by the results. I didn't, we're looking for 60% or more, but, being at 87, are you kidding me? That's and if you haven't been trading very long, these numbers don't mean anything to you. But if you're a professional trader, you guys get it. 87%, that's what we're finding today in our class. Man, it's going to, like last night I woke up at 4 a.m. thinking about this trading stuff, and I could not sleep. My excitement level's off the charts right now. I love stumbling on things that are just awesome. Man, awesome. Oh, man. So anyway. Oh, Alfred, I just got off the phone with you. I look forward to you. Alfredo. Alfredo, daggone it. Sorry. I said Alfred. It's Alfredo. Hold on. I have to look. I think it's Alfredo. I think it's Alfredo. Right here. This is Alfredo. Yes. So it's great talking with you. Looking forward to having you and your wife join our class coming up. So that's it. Just a shout out to you if you made it this far in the video. And you kicked me in the butt saying, hey, when's the weekend video coming? Here it is. I did it for you. Because I was thinking about just waiting until tomorrow. But I did it for you, my friend. Take care, guys. We'll catch up with you later.